Welcome back to Mortgagenomics Canada. I'm your host, Marco Gello. I'm a duly licensed mortgage broker in British Columbia and Alberta, born and raised in Calgary, currently living in North Vancouver. If you're from either of these provinces and require any mortgage-related services, please do not hesitate to contact me. Call or text me right now at 604-800-9593, 604-800-9593. One application, one credit check, and access to Canada's top lenders. Today I'm going to talk about how to build your credit history if you are new to Canada. Let's begin. If you're new to Canada and qualifying for a mortgage, there is one major qualification nugget that works heavily in your favor. Upon entry into Canada, the mortgage qualification rules essentially give you the benefit of the doubt when it comes to your credit history. Although you may have been a regular user of credit in your mother country, Canadian mortgage lenders will only require a short 2-year Canadian credit history. Unless you have originated from the US, where the ability to acquire a US credit report is convenient and or accessible, most Canadian banks will thereby request one. Otherwise, for most other applicants who originate from other countries, Canadian banks will essentially project your credit worthiness based simply on your newly established 2-year tenure in Canada. Take advantage of this. It's a once-in-a-lifetime opportunity. Like before you get that new vehicle financing and so on. So yeah, take advantage of this light credit load that you currently have. Because in a nutshell, the more credit you end up incurring over time, it gets reported to your credit report, and the less purchasing power you have when it comes to qualifying for a mortgage. So going forward from here, your credit activities are reported and logged within Canada's leading credit bureaus, and those are Equifax and TransUnion. The tabulation of your credit score is dynamic, it's constantly changing, as the bureaus receive monthly reports from all your creditors. So depending on the reporting, your score adjusts accordingly. Credit bureaus generate scores that are unique to their own credit rating models and are therefore not identical to other competing credit bureaus. So a credit score from Equifax will not be the same credit score from TransUnion. And in Canada, the most common credit reporting bureaus are Equifax and TransUnion. For example, a score of 800 with Equifax will not translate to that precise metric with TransUnion. In addition to varying credit rating models, the bureaus may also contain different information. So not all creditors report to both credit bureaus. Hence, your score is tabulated accordingly and differently. The Canadian mortgage brokers mostly use Equifax as the default bureau when submitting applications to lenders. However, lenders may additionally pull from TransUnion once the application reaches their adjudication panels. A minimal credit score for mortgage qualification is 600 to 620. Once you reach scores over 700, and the scores I'm telling you right now are Equifax scores, so once you reach over 700, you essentially reach top tier brackets with Canadian banks. The best rates, which this gives you access to the best rates and maximum exposure to qualification guidelines. So most of the time people think that, the higher the credit reports, the better access to rates. It's true to an extent, but the bigger advantage that many don't talk about is the exposure, the additional exposure that you get to qualification guidelines. That one's massive. Here are some key rules to follow to ensure you stay on the right path when it comes to establishing and maintaining your Canadian credit score. And by the way, these rules also apply to Canadian citizen applicants. In fact, everyone should be aware of these rules, so share these with everyone you know. Number 1, apply for credit immediately upon entry into Canada or as soon as possible. Without credit, you will not generate a score. And the longer you wait, the further along you delay the start of your required 2-year tenure. So the old adage, no credit is good credit, it does not apply in a capitalist society. You definitely need to have credit. And more importantly, you need evidence of using it in a responsible manner. Number 2, acquire at least 2 forms of credit. So that could be a credit card, and a line of credit, and a car loan. and request a credit limit of at least $2,000. So the three that I mentioned there are the most common, most accepted: credit card, line of credit, and a car loan. Unfortunately, like a cell phone or a utility bill is an alternative form or source of credit, but it's not the recommended one when it comes to reporting on the credit bureau. They don't generate as many points as the credit card, line of credit, and the car loan do. Number 3, once you have acquired a credit card, use it. Your credit score will not tabulate simply because you have a credit card. You must engage it with transactions to trigger the creditor to report it to the credit bureaus. So yeah, you don't just get the credit card, you have to use it, all right? Wondering whether to proceed with a fixed or a variable mortgage? Why not pick both? There's a mortgage just for that. In fact, there's a mortgage that allows you the flexibility to configure it any way you desire. I call them hybrid mortgages. So let's say you have a $500,000 mortgage. If you wanted to, you could configure it so that $200,000 is allocated in a 5-year fixed rate, $100,000 as a 5-year variable, and the remaining $200,000 as a home equity line of credit. And better yet, every year you receive a detailed statement from the lender that outlines the cumulative interest charges for each configured mortgage. If you want to learn more, shoot me a text or give me a ring at 604-800-9593, 604-800-9593, or look me up at homefinancingsolutions.ca. One application, one credit check, and access to Canada's top lenders. And now, back to the episode. Number 4, make your credit payments on time. Okay, if you're late with your monthly payment, your creditor will report it to the bureau as such, and your score will decrease. Okay, so I can't stress that enough. Timely payments are critical to your credit score. You may be 1 week late or even 1 month, but if you are 2 payments behind, your credit score will take a serious hit. Number 5, avoid running balances on your credit for prolonged periods that are greater than 60% of your approved credit limit. So for example, let's consider a credit card with a $3,000 limit. Naturally, as the card implies, you can charge up to $3,000 on the card. But be aware that if you sustain that max balance of $3,000 for a prolonged period of time, typically greater than 2 months is when they start tracking that, your score will begin to decrease as long as you carry that balance. So many underestimate the impact of this until they qualify for a mortgage one day and are finally made aware that they have a low score. And, they could be making their payments on time and everything, but because they are maxed for a prolonged period of time, the score has plummeted. And, many people run all their transactions through their credit cards to collect various forms of affinity points, which is absolutely fine. Like I do this as well. Like everyone has their affinity points. But be wary of your balance to limit ratio. So avoid keeping those sustained balances on your card that exceeds 60%. And number 6, finally, whether you're a work permit holder, a permanent resident, or a newly minted Canadian citizen, lenders will generally close the window on any exceptions once you've been in Canada for 5 years, at which time you are essentially held to the qualification standard of domestic Canadian citizens. So, for example, if you have been in Canada for 3 years and are a work permit holder, but only have one credit card, lenders would potentially work with you and make an exception. So in lieu of not having a second credit card or facility, they might alternatively ask for a copy of your existing lease or like I mentioned before, the cell phone bill, and that would be accepted as well as an alternative, as long as you're within that 5-year period. And in some cases, they look beyond the 5 years, and they may grant you an exception if you've been here longer and you haven't worked up your 2-year tenure. All right, so there you have it. With these tips in mind, you'll be on your way to building a strong credit history in Canada. And one final thing, if you're listening and are new to Canada, welcome to Canada. Okay, that's all I got for today. Call or text me anytime if you have any mortgage questions at all, especially if you're in British Columbia or Alberta, as I'm licensed to service these specific provinces, and especially if you're from Vancouver or Calgary, as I'm very familiar with these markets. And of course, I welcome calls and emails from all over Canada and the entire world. For those that are in the process of or have recently relocated or immigrated to Canada from elsewhere, or for those Canadians who are in the process of moving from one province to another, as I specialize in interprovincial relocations and new to Canada mortgage applications. And of course, I do every other mortgage qualification scenario you could possibly imagine. Come to me for all your mortgage needs. Call or text me at 604-800-9593, or you can get me on WhatsApp, or just go ahead to link up to my website, homefinancingsolutions.ca, where you'll find my complete catalog of past blogs and podcast episodes. And one more thing, I have recently added to the episode notes a link to download my award-winning mortgage app. This thing is amazing. It comes equipped with tons of calculators, market interest rates, and every other thing you can imagine. It even enables you to do a snap pre-qualification on yourself. You got to check it out. Look for it in my episode notes and give it a try. Thank you again for tuning into Mortgagenomics Canada. Stay well, everyone. Talk again soon.